Hello and welcome to this video on depreciation. Now, depreciation is the measure of the amount of the reduction in value of non-current assets over a period of time. Now, there are two methods. The first one we're going to look at is the straight line method. So as a straight line method, in here we'll have the depreciation shall be the same every single year. So to work out the depreciation, this is the first method. You take the cost of the asset, take away the estimated residual sales value. Now, the estimated residual sales value is also known as the scrap value or the disposal value. So the amount you'll receive when you dispose of the non-current asset. Then you divide by the number of years expected use of the asset. So how many years you're going to use the asset. Now, in income statement entry, depreciation is treated as an expense in the income statement. In the statement of financial position, the non-current assets are shown at cost less accumulated depreciation, which equals the carrying amount, and the carrying amount is also known as the net book value. So often in the exam, they'll use the term net book value, and that's the same as the carrying amount. Right, let's have a look at a little example now. So we've got a machine which was purchased by business on the 1st of January 2008. The cost of the machine was £14,000. The estimated useful life was 4 years, and the estimated scrap value at the end of the 4 years was £2,000. Calculate the annual depreciation charge of the machine. So the depreciation charge each year. Then it says show the income statement and statement of financial position entries for the following years. We've got the year ended at 31st December 2008, the year ended at 31st December 2009, and the year ended at 31st December 2010. So you notice here that we've got an estimated useful life and an estimated scrap value. So the method we're going to use is going to be depreciation. Is going to be, if I go back to the beginning of the session, it's the cost of the asset. Now the cost of the asset was £14,000. So we have £14,000 in there. Take away the estimated scrap value or estimated residual sales value, also known as the scrap value. In this question, the estimated scrap value at the end of the 4 years was £2,000. So I'm going to take away £2,000. And it's divided by the number of years expected use of the asset. So the number of years expected use of the asset, back to the question, the estimated useful life is 4 years. So it's going to be divided by 4. So 14,000 take away 2,000 gives us 12,000. And then divide by 4. And 12,000 divided by 4 gives us £3,000. So the depreciation charge each year now is going to be £3,000. So the income statement entries then. For the year ended at 31st December 2008, we're going to have £3,000. We have the same in the year ended the 31st December 2009. And again, the same in the year ended 31st December 2010. So they're all going to be £3,000. So this is the straight line method of depreciation, one of the methods. Statement of financial position. Right, so we've got the 3 years again. Now the cost, just go back to the question, the cost was £14,000. Now the £14,000 cost does not change. It's always been £14,000. In each of the 3 years, we have £14,000. Now, accumulated depreciation has depreciation to date. So at the end of December 2008, there would have been £3,000 worth of depreciation. So accumulated depreciation for 31st December 2008 is going to be £3,000. Now, 2009 is going to be the depreciation from 2008 plus the depreciation of 2009. So that's 2 lots of 3,000. So that's going to be £6,000. And the year ended at 30th December 2010, we got 3,000 for 2008, 3,000 for 2009, and 3,000 for 2010. So it's a total of £9,000. Now the carrying amount or net book value is your cost take away accumulated depreciation. So 14,000 take away 3,000 is 11,000. At the 31st December 2009, it's 14,000 take away 6,000, which is 8,000. And the end of December 2010 is 14,000 take away 9,000. That gives us £5,000. So that's our straight line method when we have the cost, the residual value, and the number of years of life of the asset. Now, this one again, this is the straight line method, an alternative calculation. So we've got an example again. Machinery was bought on the 1st of January 2019. It was bought at a cost of £9,000. Depreciation policy straight line method at 25% per annum. So we've got no estimated useful life of the asset in number of years and no estimated residual value or scrap value. So here, all we do for this one, we take the cost, we multiply it by the percentage. So the cost here, we're told, was £9,000, and the percentage is 25%. So we do 9,000 times 25%, and you get £2,250. So again, it's the straight line method. So the straight line method is going to be the same every single year. So income statement entries. 31st December, year end 2019, it's going to be 2,250. The year ended at 31st December 2020, again it's going to be the same, so it's going to be 2,250. And again, the year ended at 31st December 2021, again it's going to be the same, £2,250. Now the statement of financial position entries, so we're looking at the cost, accumulated depreciation, and the carrying amount. So the cost, so again, the cost here was £9,000, so that does not change. So the cost here is £9,000 in all 3 years. So the cost has never changed. Accumulated depreciation. So at the 31st December 2019, all it is the year ended at 31st December 2019, which is £2,250. At the end of the following year, 31st December 2020, it's the £2,250 from 2019 and £2,250 from 2020. So that's a total of £4,500. Then at the 31st December 2021, it's the 3 years worth. So year ended 31st December 2019, plus year ended 31st December 2020, plus the year ended 31st December 2021. So it's going to come to 6,750. So the carrying amount now is your cost, take away cumulative depreciation. So it's going to be a 9,000, take away £2,250, so it's 6,750. The next year, it's going to be the 9,000, take away 4,500, which is 4,500. And the third year is going to be the £9,000, take away the £6,750, gives us a net carried amount or net book value of £2,250. Right, I've got another little exercise we can do together now. So again, we've got a machine. The cost on the 1st of January 2018 was £12,000. The estimated useful life is 4 years, and the estimated scrap value at the end of the 4 years is £4,000. Calculate the annual depreciation charge of the machine, and show the income statement and statement of financial position entries for the following years. The year ended at 31st December 2018, the year ended at 31st December 2019, and the year ended at 31st December 2020. So we notice here we've got the estimated useful life, estimated scrap value. So that means we're going to have our cost. So the cost of the item, if we go back to the question, was £12,000. We take away the estimated scrap value, which here is £4,000. Then divide by the number of years, which was 4 years. So 12,000 take away 4,000 gives us 8,000. Divided by 4, and that then can give us £2,000. So the depreciation charge each year will be £2,000. So income statement entries then. The year ended the 31st December 2018 is going to be our £2,000. The following year, the year ended 31st December 2019 will also be £2,000. And likewise, the year ended the 31st December 2020 will be £2,000 again. So it's a straight line method, it's going to be the same each year. Statement of financial position entries now. So in the cost. So back to the question. The cost was £12,000. So it's going to be the same for each year. Accumulated depreciation. So the 31st December 2018, we had depreciation of £2,000. That's £2,000 there. 31st December 2019, we had £2,000 from 2018 and £2,000 from 2019, so that's a total of £4,000. And the 31st December 2020, we had £2,000 from 2018, £2,000 from 2019, and £2,000 from 2020 gives us a total of £6,000. Now the carrying amount is going to be our cost of £12,000, take away a cumulative depreciation of £2,000 for the first year, so that's December 2018, not the 31st. At the 1st December 2019, it's going to be our £12,000, take away our £4,000, which is £8,000. And at the 31st December 2020, it's going to be our £12,000, take away our £6,000, give us a carrying amount of £6,000. Now again, straight line method again, the alternative calculation. This time, our example, we've got a machine and it was bought the 1st of January 2019. The cost was £18,000. Depreciation policy is the straight line method at 25% per annum. So there's no estimated scrap value or number of years. So we use a straightforward method, which is the cost times the percentage. So the cost is £18,000. The percentage is 25%. And 18,000 times 25% should come to £4,500, which it does. So again, it's the straight line method. So the depreciation charge will be the same each year. So the year ended at 30th December 2019 would be £4,500. It will also be £4,500 for the year ended 30th December 2020. And again, for the year ended at 30th December 2021 will be £4,500 again. So it's a straight line method, so it'll be the same each year. Let's take the financial position entries now. So I want the cost. So the cost we were told was £18,000. And that will not change. So that's the same for each of the 3 years. Accumulated depreciation. At the 31st December 2019, we had £4,500. So that's our accumulated depreciation of £4,500. At the 31st December 2020, it's going to be the one for 2019 plus the one for 2020. So it's going to be £9,000. And for December 2021, we got £4,500 from 2019, £4,500 from 2020, and £4,500 from 2021. That's going to give us a total of £13,500. So our carrying amount or net book value is our cost, take away accumulated depreciation. So at the 31st December 2019, that would be £13,500. At the 31st December 2020, it would be the £18,000, take away the £9,000, giving us £9,000. And at the 31st December 2021, it will be the £18,000, take away the £13,500, giving us £4,500. Now the next one is, we've got a different method now for depreciation. We've got what's called the reducing balance method. And the depreciation charge here is the cost, take away the accumulated depreciation, and then times by the percentage. So there's no estimated useful life, and there's no number of years, and there's no scrap value here. Let's look at an example now. We've got a motor vehicle. The cost at the 1st of January 2019 was £30,000, and it's reducing balance method at 25% per annum. So the first year, the year ended 31st December 2019. Depreciation charge is going to be the cost, which is £30,000. Take away accumulated depreciation. So in the first year, there's no accumulated depreciation at the beginning of the year. So it's 30,000 times the percentage, and the percentage was 25%. So 25%. So 30,000 times 25%. Let's put the cumulative depreciation in here because there wasn't any. So it's going to be £30,000. So you got the full method in. So £30,000. Take away 0 times 25%. And £30,000 take away £0 is £30,000. times our 25%, and 30,000 times 25% is going to give us £7,500. So that's our depreciation charge for the year ended the 31st December 2019. Now it's going to change now in the future years. So the next year ended the 31st December 2020, the depreciation charge is going to be the original cost, which was £30,000, take away accumulated depreciation. That's the depreciation of the previous years, and that's going to be £7,500. Then we times that by the 25%. So now we've got £30,000, take away £7,500. That's going to be £22,500. Then times that by our 25%. So 22,500 times 25% is going to give us £5,625. Now the year ended the 31st December 2021. So again, the depreciation charge, we start off with the original cost, which was £30,000. Take away our accumulated depreciation. The accumulated depreciation is the depreciation for December 2019, 7,500, plus the depreciation for December 2020, which is 5,635. So if I just do a little calculation over here, so you've got 7,500 plus the 5,625, and that gives us a total of £13,125. So back to here, we've got a 13,000, take away £13,125, and then we'll times that by our 25%. So the 30,000 take away 13,125 gives us 16,875. Then times that by our 25%, and that's going to give us £4,219. Now that's going to take into account some rounding here, so we've rounded it up to the nearest pound, so next pound. Statement of financial position entries. So we're on the costs for all 3 years. So the cost, we go back to the question just to check, the cost was £30,000, and that will not change. So we've got £30,000 here, and again for the following year, and again for the third year. Accumulated depreciation. So about December 2019, at the end of that year, we had £7,500. So that's our £7,500. The end of the next year was 5,625. So the 2 years added together, we worked out already, was £13,125. So £13,125. Then for the following year, there was another 4,219. So we're going to add that on now to our accumulated depreciation. And that comes to 17,344. So 17,344. To get our carrying amount now, it's our cost of 30,000, take away 7,500 for the 31st December 2019, give us 22,500. And the 31st December 2020 is going to be the 30,000, take away the 13,125 to give us £16,875. And at the end of December, 31st December 2021, is the 30,000, take away the 17,344 to give us £12,656. So one more little exercise now. So again, reduce and balance method. So just a reminder, depreciation charge is the cost, take away accumulated depreciation times the percentage. So here we've got a motor vehicle. The cost of the 1st of January 2018 was £20,000. Reduce and balance method at 25% per annum. So the first year, the year ended at 30th December 2018, depreciation charge is going to be the cost, which was £20,000. Take away accumulated depreciation, and in the first year it's going to be 0, and then times by our 25%. So step by step, 20,000 take away 0 is 20,000, times by our 25%, and that will give us £5,000. So that's our depreciation charge for the 31st December 2018, that particular year end. And the following year end, 31st December 2019, again we do the cost, which was £20,000. Take away cumulative depreciation, that's depreciation in the past, and that is the one for the previous year, 5,000. Then times by our 25%. So let me check the bracket is the wrong way round, so let's amend that. So 20,000 take away 5,000 is 15,000, and times by 25%, and your 15,000 times by 25% should give you £3,750. So that's our depreciation charge for the year ended the 31st December 2019. Now the next year, the year ended the 31st of December 2020, so it's going to be our cost, which was your £20,000. Take away cumulative depreciation, so that's your £5,000 from the year ended 31st December 2018, plus the £3,750 from the year ended 31st December 2019. So it's going to be £8,750. That's then going to be times by our 25%. So we've got 20,000, take away 8,750, gives us, just one moment, 20,000, take away 8,750, gives us 11,150, times that by our 25%. Now it's going to give us 11,250 times by 25%, giving us 2,813. So again, that's been rounded to the nearest pounds. Right, statement of financial position entries. So again, we want the cost in our first column. Now our cost, just to remind ourselves, is the £20,000. So that's the same for each of the 3 years. So at the 30th of December 2018, it's going to be £20,000. At the 30th of December 2019, again, it's going to be £20,000. And the 30th of December 2020, £20,000 again. Accumulated depreciation. So, 31st December 2018, we've got depreciation there of £5,000. At the 31st December 2019, we've got 5,000 plus 3,750, that's 8,750. And in the 30th of December 2020, it's going to be the 8,750 plus the 2,813, gives us a total of £11,563. So the carrying amount at 31st of December 2018 is your cost of £20,000, take away a cumulative depreciation of £5,000, giving you £15,000. At the 1st of December 2019, it's the cost of £20,000, take away a cumulative depreciation of 8,750, give us 11,250. And at the 30th of December 2020, it's the cost of £20,000, take away a cumulative depreciation of 11,563, which gives us £8,438. So there's a little video on depreciation methods, straight line method, and reduce and balance method. Thank you for watching. Thank you.